If you had 1 million Naira sitting in your bank account right now, what would you do with it? Because your first 1 million Naira has the power to change your life, but only if you use it wisely. Get it wrong or do nothing at all, and you can miss out on hundreds of thousands over your lifetime. If you're new here, hi, I'm Philip. I'm a crypto and stockbroker turned financial educator. And today, I'm going to talk you through, firstly, why your first 1 million Naira investment is so important. Secondly, how to invest it safely and strategically. And thirdly, the biggest mistake that new investors make that could be costing them millions and how to avoid them. So let's start with the first. Why is your first 1 million Naira so important? Having 1 million Naira in the bank can feel amazing. It gives you confidence to make bigger life decisions. Here's the thing. Your first 1 million Naira is not just money. It's your financial foundation. It's the seed capital that can either grow into generational wealth or slowly disappear to inflation. With Nigeria's inflation rate consistently above 23% as of 2025, leaving that money in a regular savings account means you're losing roughly 230,000 Naira in purchasing power every single year. Let me put this in perspective. If you invested 1 million Naira in the Nigerian stock market in 2024, you would have made approximately 37p per returns, turning your 1 million into 1.37 million. But if you left it in a regular savings account, earning 5% interest, you'd have just 1.05 million while inflation ate away 23% of your purchasing power. You'd actually be poorer in real terms. Your first 1 million is also a psychological milestone. It proves to yourself that you can accumulate wealth. Once you hit this milestone and invest it properly, reaching your next 2 million, 5 million or 10 million becomes significantly easier because you understand the process and your money is compounding. Here's how I would allocate 1 million Naira in 2025. This is not financial advice, but this is exactly what I would do as an accountant and financial educator. Firstly, 50% in stocks. For both Nigerian and US stock markets, I will spend 500,000 Naira. The first and largest allocation is stocks. I'd split 500,000 Naira between Nigerian stocks and US stocks. This gives you exposure to both local growth opportunities and international stability. For Nigerian stocks, the market delivered 37% returns in 2024, despite challenging economic conditions. The NGX All-Share Index has shown resilience, and in the first half of 2025, it posted 16.57% returns. Key sectors like banking, consumer goods, telecommunications, and oil and gas offer strong opportunities. Companies like Dangote Cement, MTN Nigeria, Zenith Bank, and Access Bank are blue-chip stocks that consistently deliver value. The advantage of Nigerian stocks is that you're investing in Naira, so you avoid foreign exchange risk, and many of these companies pay regular dividends. For example, if you invested 250,000 Naira in a diversified portfolio of Nigerian blue-chip stocks, you could realistically expect 15% to 25% annual returns based on recent performance. For stocks, I'd invest the other 250,000 Naira through platforms like Bamboo, which allows Nigerians to access US markets. US stocks give you exposure to global giants like Apple, Microsoft, Tesla, and Coca-Cola. The S&P 500 historically returns 10% to 12% annually, and you benefit from dollar appreciation. As the Naira weakens, your dollar-denominated investments automatically become more valuable in Naira terms. Through Bamboo, you can buy fractional shares, which means your 250,000 Naira can be spread across multiple companies. You don't need millions to diversify properly. Check the video description for the Bamboo app link to get started. Next, 30% in Treasury bills. I will spend 300,000 Naira. The second allocation is Treasury bills. I'd put 300,000 Naira here. Treasury bills are short-term government securities that are backed by the full faith and credit of the Nigerian government. They are considered one of the safest investments available. As of October 2025, Treasury bill rates are incredibly attractive. The 364-day Treasury bill is offering stop rates around 19.56% to 22.62% depending on the auction. The 182-day bill is at around 18.50% to 20%, and the 91-day bill is at 18%. These are excellent risk-free returns. Let's do the math. If you invest 300,000 Naira in a 364-day Treasury bill at 20%, you'll receive approximately 60,000 Naira in interest after 1 year. That's guaranteed money with zero risk of losing your principal. The government pays you upfront by debiting you the discounted amount and returning your full investment at maturity. The minimum investment for Treasury bills through banks or stockbrokers is typically 50,000 Naira, though the CBN's primary auction requires an 50 million minimum. Most retail investors access T-bills through the secondary market via their banks or platforms like Stanbic IBTC or FBN Quest. Treasury bills are perfect for your emergency fund portion because they're liquid. If you need money before maturity, you can sell them in the secondary market and access your funds within days. Thirdly, 10% in money market funds. I will spend 100,000 Naira. The third allocation is money market funds. I'd put 100,000 Naira here. Money market funds are mutual funds that invest in short-term, low-risk instruments like Treasury bills, commercial papers, and bank deposits. They're managed by professional fund managers and offer daily liquidity. As of August 2025, top-performing money market funds in Nigeria are delivering yields above 20% annually. The DLM Money Market Fund has a yield of 22.18%. Meristem Money Market Fund is at 22.09%, and Zcrest Money Market Fund is at 22.05%. These returns are exceptional and beat most savings accounts by a wide margin. The beauty of money market funds is that they compound daily. Your interest earns interest automatically, and you can withdraw anytime without penalties. The minimum investment varies by fund manager, but typically ranges from 5,000 to 100,000 Naira. Popular money market funds include GT Bank Money Market Fund, Stanbic IBTC Money Market Fund, and Meristem Money Market Fund. You can open an account directly with these asset management companies through their websites or apps. Lastly, 10% in small business loans. I will spend 100,000 Naira. The fourth and most interesting allocation is small business loans. I'd allocate 100,000 Naira to lend to small businesses that need capital. This is peer-to-peer lending, and it can offer returns of 15% to 30% depending on the terms. Platforms like Payday Investor and Fair Money allow you to lend money to individuals and small businesses with credit scores and risk assessments done for you. You earn interest monthly or quarterly depending on the loan terms. The advantage here is high returns. If you structure your loans properly with good collateral or guarantees, you can earn 20% to 25% annual returns. For your 100,000 Naira, that's 20,000 to 25,000 Naira per year. The risk is higher than Treasury bills or money market funds because borrowers can default. That's why you only allocate 10% of your portfolio here. It's high risk, high reward. Diversify across multiple small loans rather than lending all in 100,000 to one person or business. Spread it across 5 to 10 different borrowers, so if one defaults, you don't lose everything. The biggest mistakes to avoid. Now, let me share the biggest mistakes new investors make that cost them millions. First, keep all your money in one place. Diversification is not just smart, it's essential. Don't put all 1 million in stocks or in Treasury bills. Spread your risk. Second, not starting immediately. The longer you wait, the more compound interest you miss. Even if you don't have 1 million yet, start with whatever you have. Third, chasing unrealistic returns. If someone promises you 50% monthly returns, it's a scam. Sustainable wealth building happens at 15% to 25% annually, not 600% annually. Fourth, not reinvesting your returns. When your stocks pay dividends or your treasury bills mature, reinvest that money. Compounding only works if you keep your money working. Fifth, panicking during market downturns. The stock market will fluctuate. Treasury bills are stable. That's why you diversify. Don't sell your stocks in panic when the market dips. Now, how to get started and start investing. For Nigerian stocks, open a stock brokerage account with a licensed broker like Stanbic IBTC stockbrokers or NEC registered broker. You'll need your BVN, valid ID, passport photo, and proof of address. For stocks, download the Bamboo app from the link in the description below. Bamboo is available in Nigeria, Ghana, and South Africa and makes investing in US stocks incredibly easy. For treasury bills, contact your bank or a licensed stockbroker. Most banks offer treasury bill investment services. For money market funds, visit the websites of asset managers like GT Bank, Meristem, or Stanbic IBTC. For small business lending, research platforms like Payday Investor carefully and start with small amounts. That's it for today's video. If you found this valuable, smash the like button and let me know in the comments how much you currently have invested and where. Remember, this is educational content. All investments carry risk and you should do your own research before investing. I'll see you in the next video.